AI and meme coins are the two leading crypto narratives in terms of price performance so far year to date. But number 3 is a crypto sector which isn't talked about nearly as much as things like meme coins, yet in my opinion, in terms of growth potential, may just have the most upside in the crypto sector. And of course, I am talking about RWA, which I believe to be one of the biggest opportunities for this crypto cycle. BlackRock has just launched a tokenized fund. Tokenized assets are set to hit $10 trillion. They just hit 1 trillion, so that's a 10x by 2030. So if you're sleeping on this sector, now is the time to wake up. And I'm going to wake you up in today's video where I discuss everything to do with RWA, what it is, but most importantly, the altcoins and the subsectors of RWA, which I think can exhibit the strongest returns. Now, back 2.5 months ago on January 26th, I gave my top 5 RWA picks. This is when I introduced the RWA narrative this year to my audience. Of course, I've been speaking about it for a while, but I called coins like ONDO at 20 cents, did a large segment on ONDO. You can see that ONDO is now sitting at 80 cents. It was actually at $1. So a 4x, but at one point it was a 5 to 6x. Also PENDLE at $2.40. I was talking about it actually sub $1, but this was in the most recent video. Now it's at $6.37, so roughly a 3x. So we've been early to the RWA narrative. However, I do believe if you did miss that video a couple of months ago, there are still massive opportunities in this space that I want to dive into in today's video. If you want to stay up to date with the latest altcoin picks, guides, strategies, and more for that early alpha, make sure you click that subscribe button and hit that post notification bell. I always want to make sure on this channel I'm ahead of the trend for you guys. So before we get into the individual altcoins, let's first recap what is RWA. Well, essentially, RWA stands for real world assets, which represents physical assets like real estate, gold, bonds, or commodities as tokens on the blockchain. So just as you have these real life assets denominated in a currency like US dollars, you can have that same asset represented on chain. And this comes at a major advantage of increased efficiency, as now you don't have brokers and really expensive middlemen serving as intermediaries. You can trade these assets peer to peer. It also increases accessibility because you have fragmentation of the asset. For example, if you buy a house on the blockchain and it's $1 million house, if you don't have $1 million liquid, you could buy 1/1,000,000th of that house for $1 and still get the upside to the percentage yield that the property makes via accessing it on the blockchain. In terms of accessibility, it also gives more people access to these assets. In a lot of countries, for example, you have to pay crazy fees to access the US stock market, and it costs a lot of money in terms of fees and brokerage costs to even invest in treasury bills. You can, of course, do this now with applications like ONDO Finance, for example, to earn yields on chain, and they're also going to have a way for you to trade tokenized securities on chain. So this all increases accessibility to these traditional asset classes, and a lot of the time that can also increase the liquidity for these assets. So unlike a lot of other sectors in crypto, the reason why I'm so bullish on RWA is because I see a clear benefit. Crypto is not simply using real world assets as an excuse to milk dollars out of an ecosystem. It's actually providing a tangible benefit, increased efficiency, increased accessibility to the sector, which many users are going to benefit from. And of course, the world's going to benefit from it. And that's one of the reasons why Larry Fink and BlackRock have been so vocal about it and have recently launched their own tokenized fund, because that's also where they see the world going. I do believe, as a result, RWAs will be a huge driver of value on chain because they can tap into huge markets like global bonds at $133 trillion. For context, the current crypto market cap is just a few trillion, and TVL is a fraction of that. Gold's a $13 trillion sector, for example. You can also use real-world income-generating assets for DeFi yield, for example, bonds and real estate. And as I said, there's a lower barrier to entry because there are less middleman costs. But how does RWA actually work? Well, how it works is that real-world assets represent ownership rights over an asset as an on-chain token. So issuers can use smart contracts to mint RWAs and determine how they are valued and traded on the underlying blockchain like Ethereum that they are traded on. And each token represents a part or a whole of the asset's worth. So you're essentially creating a digital representation of that asset on the blockchain. And as you can see in front of you, it's a sector which has already exhibited a significant amount of growth, with the sector now equaling around $1 trillion in tokenized securities. And as I said earlier in the video, this is a sector projected by analytics firms to hit $10 trillion plus by 2030. And I honestly believe it'll be even more than that. I think that's a mid to conservative case based on the traction we've already seen over the last year. This is going to introduce a totally new influx of liquidity into the crypto market. And of course, there will be many beneficiaries that capture some of this liquidity, which we will discuss in just a second here in today's video. One last point I would like to make is the effect that big companies like BlackRock venturing into this space have had on the success of the narrative and are likely to have on the future success of the narrative. Larry Fink said that the next step is the tokenization of financial assets, meaning every stock, bond, commodity, etc. could be traded on chain. He believes that this is the future for securities, and given Larry Fink and BlackRock's bullishness, it's likely that their involvement in the sector will only continue to grow over time, and we did see that with the launch of their first tokenized fund on Ethereum. And this is a game of follow the leader. When a big player comes into an asset class and makes big moves in an asset class, we often see these other firms also starting to follow the leader. That's what we saw with the spot ETF. A few firms filed and everyone else needs to file, because otherwise they're going to miss out on the potential upside and the fees generated. And obviously BlackRock's realized, well, this is a major money-making opportunity. And that's why other TradFi players like Citibank, Franklin Templeton, JP Morgan are also dipping their toes into RWA. And it's probably only a matter of time before many of the major banks and institutions also follow suit. When you have the largest asset manager in the world like BlackRock foraying into a sector, this certainly does give it a stamp of approval and authenticity. And this has resulted in some short-term hype and speculation this year, which puts RWA at the 100% profitability mark in terms of the overall sector year to date. That's every token in the sector, only coming after memes and AI for YTD performance. I mean, 100% is nothing compared to the amount of growth that we are probably going to see. I mean, it's a $1 trillion asset class right now in terms of tokenized security value, not market cap value. And that's projected to go to 10 trillion. So that represents a 10x in total market size. This could very easily mean 20, 50, 100x's across many of the altcoins that capture the value. Of course, some are going to fail, some are going to succeed, but it's our job to pick the diamonds in the rough here and start positioning ourselves, if you haven't already, from those previous videos that I made, in a narrative that I think has a lot of upside potential. So now let's get into the fun stuff, the altcoins that I'm looking at in the sector, the altcoins that I'm investing in the sector, and some of the upcoming launches that I am keeping a close eye on in the sector. This will be split up into a few different categories. I want to start broad and focus on the infrastructure and break down subsector by subsector where I'm allocating my capital in the RWA space. The first sector that we must address when we discuss a narrative like RWA is, of course, starting broad with L1 and L2 infrastructure. These are the backbone of every single application. Every single RWA market, protocol, yield platform is going to have to be built on a chain, whether they build their own chain on Cosmos using the SDK, whether they launch their own L2 via the base SDK. It doesn't matter. They're going to need a chain to put the dApp on. And many of these protocols are choosing to leverage the security of existing networks. For example, Ethereum, and also you have access to users and wealth effect. It's much easier to create a successful dApp on a chain with, a lot of users. Solana is another one. I'm seeing many RWA protocols be built on Avalanche, etc. Now, this is a very indirect way to get exposure. So don't think that by buying Solana, you're going to get access to the upside of the entire RWA sector. Obviously, if billions or trillions of dollars come into crypto as a result, this is going to be good for prices. Very good for the entirety of crypto because more liquidity is coming into crypto, right? That's why it's such a powerful vertical, not just for the tokens within the sector, but crypto in general. It's bullish even just as a crypto holder. But that's not direct upside because you're essentially hedging with a bunch of other verticals and applications that are built upon each chain. So it's a very indirect way to get exposure, but I guess I wanted to mention it because anyone that's slightly lower risk in the market, if you're investing more capital into the market, you may want to look at these kind of plays. But I know a lot of you will want more direct exposure. So let's talk about a couple chains keeping on the subject of infrastructure that are focusing primarily on RWA. One that comes to mind is Redbelly. They're not launched yet, but they already have billions of dollars of real-world assets already committed for the chain. It's a purpose-built RWA tokenization platform that operates as its own layer 1 network. There are also other chains like Mantra, which is currently liquid and trading right now. And this is a regulatory compliant RWA chain for enterprises. One of the first, if not actually the first, because it launched back in 2020, layer 1 blockchains solely purpose-built for RWA, which is capable of adherence and enforcement of real-world regulatory requirements, because RWA chains are slightly better suited, generally speaking, like Redbelly, Mantra, etc., because of the way that they're built to actually fall in the scope of the regulatory requirements. Because this is one of the downsides and challenges of RWA. It's not all smooth sailing. It's still a bit of a gray regulatory landscape, and regulators are still working out how to best go about this. Do users need to KYC to access some asset classes? How do we actually, manage the tax implications? Because, the US government might not want people trading stocks and them not capturing tax on capital gains. There's lots of implications, so it's definitely a watch this space. If that does kick in, it's definitely at the advantage of chains that have been a little bit preemptive in this and looking into the regulatory purpose-built solutions. So that's why I mentioned these in particular. Mantra is one that I've been talking about. It's obviously performing super strongly. This is one I'm an investor in and has been absolutely pumping in price under the back of the RWA narrative. Before I get into the next sector of RWA that I'm bullish on, and we'll go down the risk curve, so we'll get a little bit more degen as the video goes on. I want to say that I am posting a lot of this new alpha in my group, which is the Miles High Club. There is a link in the description to the waitlist below. It's currently sold out, so we reached the cap of 1,000 users. For the indefinite future, I will be keeping the cap there because I really just want to nurture and nourish that first 1,000 people that came in. But I'm going to be posting my RWA breakdown report in there today, and I also keep people up to date with things like new listings in the space. Trueflation's launching soon, so I keep people updated with that. And I also give, more up-to-date information and stuff based on sectors like RWA. So if you are interested in joining the waiting list, you can join using the link in the description or in the pinned comment. As I said, I'm not letting anyone in for now, but then you'll be the first to know when I actually do reopen the group. And there's all sorts of stuff coming in future for all the members that are currently in there, like IDOs, giveaways, etc. So super excited for that. But let's move on to the next sector of this video, which is the oracles. Clearly, L1 and L2 infrastructure is an indirect way to get exposure. Another indirect way to get exposure, but in a way I view this as more direct because it's essentially the main use case, in my opinion, for oracles now in terms of just the amount of price data that needs to be corresponded on chain. This is, of course, the oracles. So you've got oracles like Chainlink, Pith, API 3, Band, etc. These are all responsible for reflecting the price data of a real-world asset in the real world to reflect that accurately on chain. For example, if you have a property and that property value goes up by 50%, if you have that tokenized on chain, that token needs to reflect the fact that that house is now worth 50% more. And that needs to accurately reflect, otherwise having a major discrepancy, there's gonna be an issue. So what oracles do is they bridge the information from the real world to the blockchain and actually across a variety of other blockchains like Ethereum, Base, Linear, Avalanche, etc., and actually give the necessary information to keep price updated. Now, this is true for a variety of other sectors as well in terms of just price feeds in general. Many protocols have integrated things like Chainlink, but for RWA, this is actually one of the biggest upside verticals in my opinion. And it's something that's slept on in terms of, when we speak about tokens like Link, I don't hear everybody making this point, but it's a very significant point to make. Link is very, very involved in RWA, and if RWA succeeds, Link is going to undoubtedly be a beneficiary because a lot of these protocols use Chainlink or Pith, and mostly Chainlink I've seen, to actually feed this price data. So that's obviously going to lead to more token value accrual for Chainlink. That's a positive thing for Chainlink. So this is, in terms of a major cap, one of the tokens I'm most bullish on in the market. Obviously, it's lower risk. As I said, we'll get a little bit more risky as this video goes on. But for those that want these general proxy bets that are a little bit less risky, Link is a major cap that I think is worth accumulating on major dips. We recently did see a major dip actually from 23 to 17. You're probably not going to make a 50x on Chainlink, but if this bull market continues, expect to see tokens like Chainlink being strong performers. And then you also have other ones like Pith, slightly less bullish on Pith than Chainlink. However, the benefit of Pith is that it's more purpose-built for layer ones. So it actually connects more of the newer layer ones that Chainlink does. So if you're building an Oracle portfolio, let's say you're weighting, 2 to 3% of your total portfolio in Oracles, Pith actually does become a decent one because you can basically hedge your risk a little bit. And I like having exposure to both, although I am heavier in Chainlink at the moment. All right, so that was the infrastructure. The layer ones, the layer twos, the Oracles. Now let's get into the specific RWA protocols that I'm bullish on. What are RWA protocols? Essentially, they adapt decentralized applications that are often built on other chains that offer the ability to do all sorts of things in the RWA world, like trade tokenized assets, earn yield on tokenized assets, swap tokenized assets, do anything with these tokenized assets. You're going to need protocols that facilitate this, that actually leverage real-world assets. You can actually go a step further and look at some of the dApps that aren't infrastructure platforms, like the one I'm going to speak about, which is ONDO Finance, but the dApps that are actually utilizing RWA. There's one at the end, which I'm bullish on, which is in this sector, that are utilizing RWA to, power their ecosystems. So they might actually be buying up properties or real world assets to power some sort of staking mechanism, etc., or make their yield on their platform sustainable. That's something I think is going to start to become more common in crypto projects, tying in as the RWA regulatory landscape becomes clearer, real world assets into their treasuries, for example, where typically you would only have crypto assets. So it's a super interesting vertical. ONDO is my biggest holding in this sector. ONDO Finance is probably, in my opinion, the best RWA play as well. It is also expensive in terms of its valuation. I wouldn't say that means it doesn't have upside, because I think it does, but it just means for those that want to make that 5100x, you probably are going to find it a little bit harder now. Although I was, as I mentioned earlier, talking about this at the 20-cent mark. What is ONDO Finance? It's an institutional grade financial platform, which is backed by Founders Fund, Pantera Capital, and Coinbase, essentially offering you to earn yield on US treasuries and the US dollar on chain. So it's one of the first protocols and the third biggest protocol in terms of TVL in this sector that allows you to earn yield on US treasuries on chain. They recently had a very big announcement, which is going towards solving the RWA liquidity problem, that they're going to introduce something called Global Markets, a platform to bring all publicly traded securities on chain with native access to traditional securities exchange liquidity, like from the NASDAQ, NYSE, and LSE. This is absolutely massive. They're solving one of the biggest problems in RWA. It may succeed, it may not succeed, but boy, I've got to give it to the team here for making this endeavor, because it's a big undertaking and obviously has huge upside if they can execute on this vision, because it would be the first of their kind. They're also moving into BlackRock's fund, which is BUIDL, their tokenization fund, allocating 95 million of the OUSG assets in the fund, which has drawn 240 mil since debut. It's actually a little bit more now, I think sitting around 250 to 270 million since debut. So they are tying in with other big players like BlackRock, which does lend more legitimacy here to their claim as one of the strongest RWA protocols. Has had a recent dip, did pump to $1. It's come back down a little bit. Big dips on ONDO, I think, are for buying. Obviously, I'm a biased holder here, but I'm a big fan of ONDO. I do think it's one of the leading players in the RWA space for a reason. Let's move on to the next one. This is PENDLE Finance, another token that is significantly up. I was talking about this at 80, 90 cents. Congrats, by the way, to everyone that got into these. We're obviously super early to the RWA narrative. That is something that I try and do on this channel, so make sure you are subscribed with that notification bell on if you want to be early to these narratives. But PENDLE's one I actually think has more upside. Now, it has been parabolic, so wait for major pullbacks, but we do get them. It doesn't look like it, but if you zoom in, right, to 2024, we do have these periods where you do get these major pullbacks and have opportunities to accumulate. So not all hope is lost for people without exposure to PENDLE, but I do think this is another great one because essentially what PENDLE does is it allows you to access yield opportunities on chain in what is a pretty flexible platform. So because they can basically spin up new pools and allow you to stake and earn yield on RWA tokenized assets, it's very adaptive, and that gives it exposure not just to RWA, but a variety of other verticals like liquid staking, restaking, which is really how it became popular. The reason why it's been pumping in price is because of its VE tokenomics, which basically mean you can lock up PENDLE to boost yields, and that really incentivizes people to stake. And as RWAs come more and more on chain and become more commonplace, I think that will lead to more people staking PENDLE, because essentially that'll enable them to get better returns in the ecosystem. And as PENDLE generates more revenue from more people trading these assets and from more of these assets being listed, that's obviously going to be good for yields overall. So that is also one that I'm watching. Now, you might be saying, Miles, they've already pumped. All right, I'll tell you that one that hasn't pumped, that could have a lot of upside in the RWA space, and that is Frax. I've been talking about Frax for a while. Look, I admit it's a frustrating one because I've been accumulating this one too for the last year, and it hasn't done much. We're up maybe 40%, but not a huge pumper like, ONDO or PENDLE. I think Sam, the founder of Frax, who's amazing, by the way, and the whole team's been amazing building through the bear market, has big plans for RWA. They've already obviously rolled out the ability for you to earn yield on US treasuries on their protocol, but there's a lot more that they can do. They also have these VE tokenomics like PENDLE, slightly different, but that benefits from the entire ecosystem. So Frax pretty much is a lending protocol. It's a collateralized stablecoin. It's an L2. It's also RWA. So basically, the way I think of Frax is it's a DeFi powerhouse. When we do see a DeFi season, and I say when because I think at some point it's going to come, I think Frax can move really quickly and perform well, but it's a slow one. So just keep that in mind. But this is one I've been accumulating. I still like Frax. It's been chopping sideways. It has given you opportunities to secure some profits like around that $11, $12 mark, but this hasn't pumped as much as some of the other coins, and I still think it can perform well. So that's one that I'm watching. Now I want to move on to the unreleased coins, because this is where you can get some of the most explosive price action. Obviously, that's no guarantees that these ones will explode upon launch. Sometimes you actually do see these lulls where they come down in price on launch, and that can be the accumulation opportunity. But I want to touch on a couple that I'm looking at. One is actually launching today. When you're watching this video, it's probably launching. I'm just filming, I think, 3 hours before the video goes live. So probably out by the time you watch. So definitely take a look at the price. I'll get into that in a second. Before I get into that, I'm just going to look to see if I've missed any RWA coins, because I know there'll be a lot of other coins you want me to talk about that I may have missed. I do like Centrifuge. I like it. I just prefer ONDO. So I've actually capitalized more in ONDO. Goldfinch as well. These are decent proxy plays. So the thing you got to understand about any narrative is that it's not just about which protocols succeed, it's also which ones fit the narrative the best, and these definitely do fit the narrative. So I don't mind them as proxy plays, similar to like how the AI space operates. Clearpool I think is decent as well. There are a few others down the list, but now we're getting into the more risky speculative territory. And this is the thing with RWA. Not all of the amazing protocols that are going to deploy have deployed yet, which creates opportunity because these new launches can come in and do really well and harness what is a sector with a lot of new active investment. So the fact that ONDO launched this year is a testament to this. I mean, this is a new coin, ONDO, and look at what it's done. There will be new coins like this that launch that do similar things in every sector, but especially in a sector like RWA, where there's not much on the market right now. I would say the closest sector to RWA is probably AI in this respect. AI and gaming are quite similar, but I would say AI and RWA specifically have some of the most room for these new launches to come in and disrupt, which is obviously amazing. So which ones am I looking at? One of the new launches I'm looking at, which is on the very near horizon, is Lingo. So this is one of the most novel use cases of RWA I've seen to date. So remember earlier when I was talking about protocols that aren't an infrastructure layer, but are actually buying up assets themselves and offering that to power yield? Well, this is what Lingo does. It's essentially a platform which funds an RWA pool of real-world assets, for example, like real estate, so buying up real properties. With the yield from these assets, like these properties, they redistribute the net yields to the reward ecosystem, and that reward ecosystem is partnered with major brands, for example, retailers, travel companies, etc., to enable you to redeem those rewards for holidays, your favorite stores, discounts, online shopping, all sorts of things. So like a real reward utility token. This is cool to me because it doesn't just appeal to crypto natives. Anyone in the real world can benefit from this. When I say real world, we are in the real world, but we're in a bit of a crazy world. I'm talking about people that aren't even Web3 native, but can actually log in, stake some Lingo coins, get access to these rewards and benefit from it. And at the end of the day, that is what crypto is built for. It's to bring people a net benefit. The way the space is currently constructed is that a lot of protocols are launching to be like a net extraction, I feel. They're not providing a net benefit. So we should be providing accessibility to users. We should be providing ease of use, UX to users that make their lives easier, not just in crypto, but in the real world. So Lingo is an example of a project which is actively doing this, and keep your eye out for some major announcements. There's one coming in a few days. They're teasing it right now. A little bit of an airdrop logo here. I wonder what that means. I'm an early investor in Lingo, by the way. So that's why I'm being a little bit secretive now, because I do know something, but you will see in a few days what's coming. And the reason I'm an early investor is because I think they're doing something novel and cool. Will it succeed? I don't know for sure. Nothing is guaranteed in crypto, but what I can say is that it's certainly a cool application of RWA in the space that I've got my eye on. Let's move on to another one that I've got my eye on that, as I said, is launching today. Actually, the token is live right now that you watched the video, and this is Trueflation. So Trueflation is an RWA infrastructure play providing decentralized infra for RWA indexes and inflation. So think of it as the bridge for blockchain technology and real-world economic data. They're backed by Chainlink and Coinbase as well. So I recently invested in this one because they had the big backers. I invested on the early stage market, so I'm interested to see what the price is in a couple of hours, or when this video is coming out, we will know the price. But they have some of the best partnerships in the space. Obviously, they're backed by Chainlink, backed by Coinbase, getting big exchange listings, etc. So this is one that I'm looking forward to, but obviously on launch, look at the valuation, look at the price, and assess that versus its competitors. If something launches at a 10 bill FDV, it's probably not worth buying into. If it launches super low and you think there's an opportunity, then you can consider trading a token early. But it can be risky because in the early stages of a project, early investors that do get their unlocks are sometimes selling. And what this can do is this can put supply pressure on. So I always recommend waiting and seeing where things settle. Okay, you could miss a 2x, but it is better than getting dumped on the second a token launches. And oftentimes they do have a bit of weird price action day one. So I'd also stay away from leverage if there are perps on a coin like this. But hopefully this video gives you a little bit of perspective here as to how I view the RWA sector. It's a sector I'm extremely bullish on, also one with a lot of upside. And I'll continue to update you here on the channel with new RWA plays in the future. I'm also going to keep my community members in my Discord, where there's a link in the description for the waiting list if you do want to wait. But as I said, I don't know when I'm going to let more people in to keep them updated with things as well, because you guys know these videos take hours to create. Sometimes I might want to give a little bit of alpha. It's much easier to do it over there in a quicker manner. I will see you in the next video. Have a lovely rest of your day. See you later. Peace out.